This is Craig at Max Trading along with Eusebio, and it's our pleasure to welcome you to our real-time trading session today. Great to have you in the room with us, and we're looking and hoping that today's job news will give us some nice price action. My crystal ball broke, so I don't know for sure that will happen, but we hope that it will. As always, we never know what the numbers will be when the news is released. And even if we did know the number, we don't know how the market will react to those numbers. But Eusebio has the max charts ready, and he'll take advantage of whatever the market provides for us today. We appreciate the opportunity to show you how max trading methods will take advantage of the price movement. And what I think is even more important, you'll get to see how our risk management protects the account balance as we trade. If you would, please remember that this is not a trading room. We are not giving you trade calls today, so nothing that you see or hear in this webinar is to be taken as entry or exit recommendations or as trading advice. All of it, everything, is for educational purposes only. Eusebio is here today to lead us into the charts for this NFP real-time session. I know that we have some in the room who have not yet had opportunity to meet Eusebio, so I'm especially glad that you're here, and you will soon discover that Eusebio is a highly skilled trader. And I think you'll be able to sense, and rather quickly, that he truly enjoys helping his fellow traders. So it's great that you're here to listen. I hope you'll be able to watch carefully, and you'll learn as you watch. And do feel free to ask questions in the question panel of your GoToWebinar window anytime. We'll try to make sure that every question gets answered. And those of you who are Max members are welcome to join us in the Max chat room. The methods that you will see today, these are taught in the Max courses. Our next round of live training begins in early February, and you're welcome to join us then. Or you might want to choose to begin your training anytime, which you can do by using our videos. It's really very much the same as being in the live webinars. Your homework is graded, your questions is answered, all of those things that are necessary for a good training experience. And we do provide extremely nice discounts for those who take the time to attend our webinars or to watch the video playback, as many of you will be doing this week. So I'll post some links for you for those who would like to take a closer look. Eusebio, I think that's about all of the preliminaries, so we're ready to get started. And let me say, we do really appreciate you sharing your time with us today, and I'll give the microphone to you.
Thank you, Craig. So welcome everyone to this open house session. So I hope you are all doing fine before the coming weekend. And before starting, let's make a quick usual sound and audio and video check. Do you see my screen and do you hear me well? If you would like to type a yes in the question area or in the Max chat room for those of you who are the Max members. Oh, thanks, Edward, Francis, Matthew, Randy, Jan, okay, Frederick. So I'm looking both in our Max chat room and in the question area. So, well, so today is the non-farm payroll announcement, and so we have, in fact, two non-farm payrolls, one in USA and one in Canada. Both are important, but both are difficult news to consider and to analyze, because we have always to consider, in fact, together and in agreement, the non-farm payroll itself with the unemployment rate. And let me show you here what I consider as tradable situations or interesting situations. For the US dollar, so we have a forecast for the non-farm payroll of 198K and an unemployment rate 3.7%. And so in order to have directional and sustainable movement with the non-farm payroll, we need to have either the non-farm payroll larger than 240, 250K and the unemployment rate smaller than 3.6%. So we need to have a way larger non-farm and a smaller unemployment rate. On the contrary, if we have a way smaller non-farm, so for example here 150, 160K or lesser, of course, and the unemployment rate larger than 3.7%, then we should see the US dollar weakening. In the first case, the US dollar strengthening. And so in the first case, we can consider going long on the US dollar. In the second case, going short on the US dollar, and so consequently on the corresponding pairs. And in all the other cases, so if both numbers are not in agreement, we are in a non-tradable situation because the movement will be more erratic and so way more challenging to trade. And we have a similar situation for the CAD. So we need to CAD a way better employment change with a smaller unemployment rate to see the CAD bullish, and vice versa, a way smaller employment change and a larger unemployment rate to see the CAD bearish in all the other situations. So the CAD will not be or will not provide tradable situations. So we need to wait for both and analyze both news in order to see if we have something or not. Now, considering the US dollar with the non-farm, with the unemployment rate, an unemployment rate of 3.7% is a low unemployment rate. It's difficult to go lower. So personally, I don't expect, but we never know, I don't expect a better number in the unemployment rate. This is why I have set a small decrease in the unemployment rate. But we never know. In a strong economy, everything is possible. But historically, 3.7% is a very, very low unemployment rate. So, and even when we will have the news, the data, as soon as we will have the news, the data, so we will have to wait. If this is the case for the volatility to settle down, we will have to wait a few minutes, possibly, before considering any potential situations. If we have no potential situations, I will illustrate on a forced trade how the trade risk management we use within the MAX to optimize the result of a trade, whatever the result of this trade, for example, to minimize a loss or to optimize a profit, even if the movement will not be a nice movement. So that's it. And so we will have to wait for the news. We have not to forget also that 2 minutes after the non-farm payroll, we have the revision for the non-farm payroll itself for the US dollar, but it is not mentioned in the calendar. And so we have just to wait now around 6 minutes before the numbers. So, and keep in mind these notes. These are my scenario. Now we don't have the non-farm payroll and the unemployment rate in agreement with a big deviation. Often this happens 1 out of 3 times on average, and these last months it has happened less than often. So it's a rare situation due to the fact that the unemployment rate is extremely low. This is why the non-farm payroll these last months have not produced so important movement on the Friday. Well, so we have to wait for the news in around now 5 minutes, a little more than 5 minutes. And for the moment, when I check on my currency meter, so I see that almost all the currencies are in the neutral range. So the market is really waiting for the non-farm payroll. And we have just the Aussie, which is weaker than the other currencies, but progressively gaining strength, and all the other are really in a neutral range. So we have to wait to have any potential situations. On my chart, I'm illustrating for each currency or for each pair I consider to follow 2 types of template, standard template, not a standard template, but a time bars template, and then sum bars template. Sum is a max terminology for this type of chart. And if we have situation, I will show how the max applies to our SAM charts. We have some indicators on the chart, and so these indicators will be used, in fact, to define some potential exit situation if we have some potential tradable movement. So we have also some lines, for example, here on the Euro-US, the Euro-Kiwi here, we have some horizontal line. These represents levels we call max price levels, and so we can see how the price has respected that level for the moment with the Euro-Kiwi. These levels are defined each Saturday, so these ones have been defined last Saturday, and it's really amazing to see how the price respect these levels in terms of potential support and resistance. I don't have a lot of history on these type of levels because they require a lot of resources, but it's really they are really good levels. For example, for the pound yen, see how the price is moving around that level in a very tight range. The range is very small. We have a range of around 48 pips, which is small for a pair like the pound yen. So that's it. So we have to wait a few minutes before the news release. So, and the other indicator we have on the chart is to define, for example, this green and red is to define the direction of the trend we have to trade, as long as with our ETF line. These yellow and orange lines are called the ETF lines, and its companion indicator, which will give us, on the technical point of view, only the direction to trade, but it's the news. If this happens, it's the news which will give us the direction to trade. Using a deviation of 10 to 20% for the non-farm payroll is not enough, Guan. For the non-farm payroll, this is an exception. We have to use a 25 to 30% deviation, so a larger deviation. This is why, if you consider here my notes, 198K for the non-farm employment change is almost 200, and I consider a deviation of, as you can see, 25 to 30%. So, okay, we need to have really a larger deviation to have an impact. A small deviation is not enough to have an impact in the market with the non-farm. For the other news, in general, when we have a news which is in percentage, for example, 0.1, 0.2% is enough, or more, of course, but 0.1, 0.2, it's enough to create some deviation which have an impact in the market. Not necessarily in the entire market, but in the related pairs, because the impact is not necessarily in all the pairs. It may be just in few pairs, and sometimes it will be in all the pairs. The non-farm payroll is typically such a news release, when there is a big surprise, so big deviations, negative or positive, the impact is on all the pairs. So if you consider the 8 main currency, you have 28 pairs, and so the impact may be on these 28 pairs. We are seeing some interesting situation. Now we have the CAD gaining strength, the yen losing strength, and so I have the pound CAD, of course, in my list of currency or pair to consider. How do I choose the pairs to monitor? That's really easy. So we have on our website here, maxtradingsystem.com, in the news watch list, we have not only all the news releases of the week which are really important, and of course today we have the non-farm payroll, and below this news watch list we have for each day of the week the pairs to monitor, and because they are the pairs where we have the highest probability to see some interesting movement to trade, in the case precisely we will have a big surprise in the news of today. So we have news on the CAD, on the US dollar, and so these are the pairs to monitor in priority. So normally the news has been released. Let's see if we have the numbers in the calendar. Not yet. yet we see some activity developing. So on the chart, but seeing the type of movement, I don't think we have a big surprise, but no reason to hurry. So 155K on the non-farm payroll, 3.7% on the unemployment rate. So the unemployment rate is unchanged, and the deviation for the non-farm is 40K, around 40K. So we are not in the condition to have a sustainable and directional movement on the US dollar. So it's a non-tradable situation for me for the US dollar. And for the CAD, we have an unemployment rate of 94.1K. This is way larger than the expectation, the forecast, and a smaller number than for the unemployment rate. So the CAD should strengthen normally, and this is what I see indeed. So it may be interesting to observe the CAD pairs I have. So I have the pound CAD and only the pound CAD. So I'm going to set our max trade monitor on the pound CAD pair here. The max trade monitor is the software we use to handle the trade when we have a potential trade. And so it's a little too early to consider a trade. We need to wait for some volatility to settle down. What I'm going to do is I will widen the two charts of the pound here, my sum chart and my time bar chart here, that way. The MTM comes here, and the button screen is here to handle the trade. So we have a one-click button panel, and then we have a panel with the result. I will explain so in a moment. Let me wait for a potential entry setup. So in the meantime, I'm going to tighten the stop loss here. So the pound CAD is an interesting pair to consider. The pound Swiss could be also an interesting pair to consider. Or the CAD Swiss, sorry, the CAD Swiss. But between the pound CAD and the CAD Swiss, I prefer the pound CAD, which is usually more volatile, or which produces more ample movement. And so when we have a news release with a big surprise, what we see usually is a movement in 3 steps, sometimes 4 steps. The eventual steps we may have is some anticipation or some speculative movement in the market before the news release. And then what we systematically see in the case of a big surprise is, first of all, a spike in the direction of the news. And so you can see here, while the price was going down, this bar was partially red. It has opened with an important gap. Then we see retracement, and then later we will see the fundamental movement. And so normally, which is what happens most of the time, not in 100% of the case, but most of the time, we should see the pound CAD going downward. But it's never a guarantee, because sometimes the market attach also importance to other factors, and sometimes so the pair does not react as expected. So we are clearly in a downtrend, and so as long as we are in a downtrend, we will consider, and this is in agreement with the news, so we have to consider only short trades. Now we are seeing the retracement. while we are waiting for an entry setup, let me explain what we are seeing in the chart. But let me prepare first of all my chart just to be ready on time when we will have something happening, which may be now. So what time is it? Oh, yeah, I will place a short trade if the price reaches my blue line, and I will set my stop loss so around this area above this max price levels. The order will be a sell order. Okay, sell. I'm now in the trade. The max trade monitor opens automatically the trade with the appropriate size, and we can see in the terminal panel view, the size. Where is it? So trades here, we see the size of the trade, 38 mini lots. It is a small account, $10,000 account approximately. So the trade size depends on two things. First of all, the financial risk associated with the trade, which is in this case I have taken 1% risk, and then the size of the stop loss, which is a rather large stop loss here because the pair was volatile, 40 pips approximately, and so a small trade size. Now in the number panel here, we have two columns, one associated with the symbol, which is the pound card, and one associated with a global situation in the case several trades are handled separately, simultaneously. But so the numbers are similar, and so we have two important lines I will describe. We have a line named ESL result. The ESL is our stop loss. The ESL means emergency stop loss. And so this is the result of the trade should the trade be closed on the stop loss line, wherever the stop loss is located, because as you will see, I will from time to time adjust the stop loss size. And let me draw here this line on always on the last opened candle. This will help me to define if I can adjust my stop loss or not. And then we have the XXX profits, which will be the result of the trade if I close the trade at any moment on the present price. So, and the other numbers gives some partial result in terms of what is the result in pips and in percentage for the closed unit, for the opened unit, knowing that whenever I open a trade, my trade is made of 2 units. 1 unit is half of the trade size. And so when a trade is open, I will consider to trade, to close, first of all, 1 unit, keeping 1 open unit to see if the price will go further in favor of the trade. And so the close will be made in 2 steps. Steve, the max price channel use the standard settings. They use the standard setting. It's the magenta and blue line. I have 2 other set of lines which is something else. It is not a free tool, and I use a combination of both to define my update of the stop loss. I still cannot adjust my stop loss here. I must stay a few pips above this line. Or I can tighten it a little bit around this area. You will see here, this is an interesting situation. You will see when I will tighten a little bit my stop loss, how the risk will evolve. The risk is minus 1% if I round off this number. So let's tighten the stop loss a little bit, but perhaps a little, no, not more, in this area. You will see the stop loss has been adjusted and the risk has been reduced by approximately 1/4. And so as soon as I will be able to adjust it, you will see how it will continue to drop. And when I will close one unit, so half of my trade, you will see how this number will drop importantly. So, now this become interesting. If the price continue to drop, this line will drop too. So, and I will be able to further adjust my stop loss. No exit setups for the moment. The CAD is still gaining strength. The US dollar, the pound is losing strength, so we are in a good shape. And because the stop loss size was around 30 pips, here. It was around here, so 41 pips approximately. I will consider to take a profit minimum 20 pips below my open price. My open price was here at 170.084, so 20 pips lower will be 8888, so around this level. So when I will have an exit setup, if my exit price level is below this line, I will make my exit, and this exit will be called an MX. So I can reduce a little bit my stop loss, not a lot. Okay, you see the risk is still dropping. Now this may be possibly an exit setup bar, this one. Yeah. We have to wait for the bar to close, and so here I will bank. Okay, I make an MX, so I close one unit here. We can see that in the trade view, in the terminal panel, the trade size has been reduced by half. Okay, and one half is opened, so I stay in the trade with half of my trade size, and I can reduce further. And you can see the risk should have dropped normally. That's right. You see that I have two trades. That's strange. Let me recheck on the terminal panel. No, I have only one trade. Oh, this number is not updated yet. So let me adjust now my stop loss. I can adjust my stop loss around this area. That way. And now you can see that with this trade, I am in a risk-free situation, even locking some profits. So whatever happens now, if the price hits my stop loss here, which is still above my entry price level, I'm beginning to lock a profit, a small profit, but a profit. If I close the trade now, I'm making approximately 0.75% profit, but I will close the second unit of the trade here on the next exit setup. It was just a coincidence here that my MX was made exactly at the level I have defined. This does not happen always, of course, but so. Shani, yes, indeed, Shani. With the max primer, you are not able to trade this situation because you need to wait for a decent pullback before having a potential remo. Here, with the max sum chart, we have many, many more opportunities to trade, many more possibilities. And so, as soon as the market begins to stabilize, and as soon as we begin to see the fundamental movement developing in agreement with the news release, then we have very soon an entry setup with the max sum, and so we can take profit of this situation. So I can tighten further my stop loss here. You can see we are far from this line. I can set my stop loss around my entry price level. This means almost break even for my second unit, and I'm looking more profits on the stop loss, but I'm approaching the 1% profit, which is my risk also for the trade. The exit setup here, I can draw a magenta vertical line on the bar I have used to define my exit setup, I will explain the concept of the exit setup here, was made on this candle. This candle was my exit setup bar, and so I have made my exit here. This exit setup in this situation has been defined by one of our indicators, even two indicators. So we use several types of exit setups. We use exit setup based on indicators, exit setup based on price action itself, exit setup based on time consideration along the day, exit setup based on a combination with the price action and some specific indicator, for example, the Bollinger Bands. And we use also the concept of movement invalidation or trend reversal. In this case, the exit setup which has triggered was with our indicators. And our indicators do not predict what the price should do. We don't use our indicators as a way to predict what the price should do, but as a way to quantify when the risk becomes too much important for the trade. For example, it's clear that when we are in this example in a short trade and the price begins to retrace upward, we are seeing a portion of our profits disappearing, and so we have to decide when this retracement is large enough, which is not easy, of course, because we never know how far a pullback can go. It may be perhaps a trend reversal, but we have to decide when the pullback is big enough. And this is what our exit techniques tell us. And so when this is the case and the price hits our exit price level, so we make our exit in two steps. We define first of all an exit setup and then an exit level. When the price hit the exit level, we close one unit. So another possibility is to wait for the trend to reverse. Once we are in a trade and we are in a risk-free trade here, even in a sure profitable trade, we can, instead of making, for example, here we have another exit setup we call a TP. We could make our exit if the price reaches approximately the same level as on the previous exit. But we can wait also as an alternative to close the last units. We can wait for the trend to reverse. Because we are in favorable conditions with the news, I will try to stay as much as possible in the trade, and so adjusting my stop loss whenever it will be possible. So I am tempted to wait for the trend to reverse. It can take several hours for that. And so I can tighten a little bit my stop loss. You can see the stop loss now is below my entry price level. This means now that the second unit is also banking some profit, and I'm looking 0.5% profit if my second unit must be closed on this stop loss. And in fact, this is what trading is. Trading, I read, I see a lot of criticism about using technical indicators in trading. The argument that a trading indicator is worthless because it's lagging, for me, it's not a valid argument, because it depends how you use the indicator. If you use an indicator to predict what the price will do, indeed, I agree. Any technical indicator is worthless. All technical indicators are worthless. Even when we draw on a chart price levels, maybe a support or resistance level, a supply or demand level, liquidity levels, and so on. So we are never sure the price will respect such kind of level. So for me, all the levels we can draw on the chart, as well as all the indicators, are just tools to get our attention that something may possibly happen. And specifically for the exit, we use our exit techniques. Some of them are based on indicators to quantify when the risk becomes too much important to force us taking some action to reduce the risk on the trade. Because the first priority of a trader, if the trader wants to last long in that career, the first priority is to trade the risk, never to consider what the profits would be on that trade, but to control the risk. And if the risk is controlled as a first priority, the results will follow, provided the trader uses a good trading methodology, of course. And for me, a good trading methodology is based on three types of factors. First of all, a good technical approach, of course, a good trade risk management and money management, and also trading in agreement with the global context. And for me, trading in agreement with the global context is the most important factor in trading. If you trade against the context, you may have the best trading tools at your disposal, you will fail, for sure. So trading with the context is, for me, the key to become successful. Then the tools will help you to time your decision, your entries and your exits in the context of the trade risk management. So, and if you trade in agreement with the context, making such, I have taken a risk of 1%, okay, and so you can see in a few minutes, I'm already locking 0.5%, and probably more when I will close the trade. I don't know how much for the moment, but at least more than 0.52, most probably. So, and if you trade with the context, so it is not so difficult to achieve such kind of result within one trade or several trades with a very high winning rate. So you will have losing trades, of course. Personally, I have around 30% losing trades, but my losses are always small. Some days when I may have 10 trades, for example, because when I trade, I may trade several pairs simultaneously. It's not rare that I have 2 or 3 trades which are simultaneous. And so I can make 10 trades on the day during the European session. And some days my winning rate is 100%, but some days the winning rate drops to 30%. But I don't mind for the losing trade. What is important is, at the end of the day, when I stop trading, have I made money or have I lost money? Even if I have only a 30% winning rate, but I have made money, I'm glad I have had a good session. And then it's up to me to check that all my trades have been made correctly, because reviewing the trade is an important process to check if I have not made errors in my trading decision following my trading plan. And so, this is why, for example, journaling the trade is extremely important. And I will never insist enough on that aspect. Always review your trades based on your trading plan to check that your decisions have been made correctly and possibly to correct if necessary. And so if you are able to make on average 0.5% profit every day and you trade every day, so around 250 days a year. At the end of the year, using the compounding effect, and you make no withdrawal, you multiply your account by 3 at the end of the year. If you are able to make every day on average 1% through one or several trades, 1%, okay, at the end of the year, if you make no withdrawal, if you trade every day, at the end of the year, you multiply your account by 10. This seems an important amount, an important multiplier factor, but don't forget the compounding effect. The compounding effect in terms of money management is one of the most powerful effects or mechanism. Now, in this situation, I will no longer follow this magenta line to adjust my stop loss, but now this red line, which is now above. So I always use the most external line to adjust my stop loss, to leave enough places for the price to breathe, to make its pullback. If it has to make pullbacks, the CAD is still strong. it's losing a bit strength for the moment, but it is still strong, and the pound is still weak. So this probably is simply a pause or a small pullback, and we can see in the corresponding time bar chart. I will not be surprised to see at some point the price resuming the down movement. So. Now, the advantage of taking an exit at this point, which corresponds to this exit setup, this was an exit setup, our max traders know it is called the TP pattern, is if the price resumes the down movement, I can open a new trade to the downside. So, the price has just come on the exit level, but I will not push on the XXX button. So we can illustrate the way to close the trade when the trend reverses. But this is the possibility. Here we have a possibility to close the trade and then later to open a new one. Or surely these sessions, these live sessions are sometimes entertaining, fun. It depends what the price is doing. And even when we don't have a good trade situation, illustrating the trade risk management is also very instructive, very fun. So, and the aim is to show that we have just to apply the rules. We don't try to make any prediction on what the price should do, except, of course, what I have explained here in my notes. So if we have a very positive employment change and a positive unemployment rate, then we can trade bullish or long the CAD. This means going short the pound CAD, of course. This is the only prediction we can do because this is a fundamental driving factor in the market. You will bring your popcorn next time. That's fun. Yeah, why not? So I see a question here by Abraham. Welcome. So really would be nice to see a non-farm payroll with the primer chart. This is not so easy, Abraham, because with the primer we need to wait for this pullback to be close enough to our ETF lines and then to wait for an appropriate entry setup, as you know. So because here we would wait, for example, for a short Remo. And so for that, we need to have the pullback deep enough to come on the ETF line or to cross upward the ETF lines. Hello, Eva. Hello, Ron. My entry setup was on this candle. So this was my entry setup. The entry has been made on the next bar, and we are used to mark our entry setup bar with a green line, vertical line, and an exit setup with a magenta line. Because after the trade or at the end of the day, what I do personally, I always make a screenshot of my trades when I trade live, of course. I make a screenshot of my trade in order to post-review my trades. So, because sometimes I make also errors. I'm a human being like any other, and it may happen I make a mistake. Because sometimes we need to go fast in taking a decision or in analyzing what is happening in the trade. In our tools, we have around 20 exit techniques at our disposal. And mastering all of them need to stay extremely focused on the chart to see which one applies. And when it applies, sometimes when we use the sum chart, we need to go very fast. And it is not an aggressive chart because my size of the bar here is a rather large size. It's 8.8 pips, so rather large. But sometimes when I'm able to focus intensively on the chart, I use an even smaller size for the bar. And so the price seems to move very fast. It doesn't move faster than on a time bar chart. It moves at the same speed. But the bars are printed faster on the chart. You can see this movement, this down movement, in fact, corresponds to this red bar in the chart. And this small pullback corresponds to this small pullback in the bar chart. So 3 bars in the time bar chart correspond to all these bars in the sum charts. Now, you could say, of course, you had an exit setup here and the price is continuing to pulling back, and so your profit is disappearing. Yeah, I know. But as I have said, I have 2 alternatives to close my second unit, either on the next exit setup, and then I have the possibility to reopen a new trade if the price resumes here the down movement, or I can wait for the trend reversal. And if I wait for the trend reversal, of course, I can make a smaller profit. It may be possible the price will hit my stop loss, my adjusted stop loss, but I may also close the trade with a larger profit. On the long term, when I make one entry to exit without making any scale-ins, on the long term, the results are the same. With the first version, we make more trade, but with smaller profit. With the second version, we make less trade, but with larger profits. And because these open house sessions last 2 hours, it's not appropriate to make scale-ins, because scale-ins add risk to the position we are handling, and this requires to handle more carefully the trade and with a 2-hour period. So it's not wise to illustrate the scaling mechanism. So no reason to adjust the stop loss for the moment. We need to see this red line to begin to drop to be able to adjust the stop loss. The stop loss is called an ESL, an emergency stop loss. ESL means emergency stop loss. And it is called emergency stop loss because its aim is not to protect the trade, but to protect the account. The worst case scenario is not when the price is going against the trade and hit the stop loss. This is not the worst case scenario. The worst case scenario is when we are blind for the trade. For example, we may have the PC crashing. We may have a problem with our internet connection in such a way that we are not able to follow the trade. And when such kind of incident occurs, sometimes we have also some difficulty to reach the broker by phone. And so I always have several ways to reach my broker, but in case of I cannot, at least I have a hard stop loss to protect my account in the meantime the price goes against me. And so the size of the trade is based on that stop loss too. This is really the very worst case scenario, and the aim is to never let the price hit our initial stop loss. As long as we are able to do that along the trade, whenever we can adjust the stop loss, we can tighten the stop loss, we tighten it in order to reduce the risk on the trade until we reach a risk-free situation, at which step then we can focus on optimizing the trade result. So we have rules how to open a trade, we have rules how to exit in one step or several steps the trade, and we have rules to adjust the stop loss in order precisely to optimize the risk on the trade, to minimize the risk at any moment. So see now the price has moved to our ETF lines. The pullback is deep enough. If the price comes back, we will have, as you can see, Abraham, we will have a Remo setup, which can be used as an entry setup with the max primer. Yeah, and as Dan is explaining, you can check, of course, other time frames to try to understand the price. That's true. That's true. And so, for example, in the 4-hour time frame, this pullback is the home base rejection. So, not in the 5-minute time frame, not in the SAM chart, but in a higher time frame, it's a home base rejection. So the maxers know what a home base rejection means. So it's a specific price action situation. So, which may represent an interesting situation for a resumption of the down movement. So we are never sure of that, of course, because the 100% never exists in trading. Even if you carefully follow all the driving factors, and there are a lot of driving factors in any market, even if you follow all of them, and at some point they are all in agreement for one specific direction, you are never sure that the price will follow that direction. And the reason is very simple. So, who are the actors able to move the market? These actors are the big boys. So the big trader, the important traders in important banks. And so you have several banks, approximately 10 to 12 banks around the world control the Forex market, approximately 80% of the Forex market. And they may have divergent objectives, because their objective depends on several factors. And so when, for example, if they form two groups with divergent objectives, so this means that they will not necessarily follow the same way all the driving factor in the markets. It depends on their objective, it depends on their constraints. In fact, I don't talk about the tactical way for them to handle their trades, but to establish the direction of their position. So, and so this is why you will never have 100% guarantee that even if all the driving factors are in favor of a specific direction, the price will follow that direction. So, in the meantime, the CAD is still strong, but begin to lose some strength. This explains we have that pullback. The pound is progressively gaining a small strength, but it's not obvious, so it's still weak. Or I can show my currency meter, and so you will see why I have chosen the pound CAD. So this is my currency meter, and so the CAD is here, and the pound is the red line here. So the brown line here is the pound, is the CAD, and the red line is the pound. And so you can see that it was the best, it was even the best pair to consider in terms of currency strength. And should we see the CAD gaining strength, regaining strength, and the pound weakening a little bit further, we should see the downtrend, so resuming. And by the way, this currency meter is not fed with the data feed of MetaTrader, it is fed with external data feed coming from different banks, directly from different banks. So it does not follow exactly what the price is showing us on the MetaTrader platform. There are currency meter based on the data feed of the MetaTrader platform, but I always prefer external data feed when these data feeds come directly from banks. So we have a more realistic behavior of or view of the strengths of the different currencies. So don't forget, the banks, in fact, do not trade pairs. They trade currencies. They buy, for example, they buy CAD against a group of other currencies, possibly. It may be against the pound, it may be against the US dollar, it may be against the euro, and so on, when they have to increase or decrease the levels of the currencies they may have. You can consider that they have currency inventories, and depending on their objectives and constraints and the situation, the global context, they have to adjust the level of these inventories. So a currency is nothing else as a commodity, as another commodity, as gold, as crude oil, as corn, wheat, and so on. It may be possible that the price will hit my stop loss. That's not a problem, so the trade will be closed. And if we have another opportunity in the time we are left together, I will show you how to, or how we open it. So, and so in this control panel, in fact, the two most important numbers I pay attention are the ESL result and the XXX profit, because this gives me all the flexibility I have to handle my trade, to control my risk. My first aim is to decrease this number when I open the trade. This number represents my initial risk, and my aim in handling the trade is to decrease that risk as much as possible until it becomes a green number. When it becomes from red to green, then I'm looking some profits. And then I can watch this number, which is the profit. Then it will be the profit if I close the trade at any moment on the present price. And if, for example, with some fast movement, the price reaches, for example, a level of 2% profit or more, I will not hesitate to close the trade and wait for another opportunity. Or to scale in, because with the max standard course level, we have a process to scale in, which is a powerful process. And so, but this is when I consider to open a trade around the London Open. My trading session is from the London Open, sometimes the Frankfurt Open 1 hour earlier, until I have closed all my trades, or around the European markets close, so around the London close. So will the trend resume downside? We will see. Oh yeah, there were a lot of details for each entry or exit situation. So, and it's not true that trading must be simple. If trading was simple, there would be many more successful traders. So trading is really difficult. We never end understanding what is happening in the market. We never end studying, learning trading techniques. We never end studying trade risk management techniques, and so on. And we have to do that because the market is evolving. So I don't trade Forex nowadays as I was trading it 10 years ago. 10 years ago, when we had a news release, 12 years ago, more precisely, 12 years ago, it was easier to trade the news. It was possible to take a position just after the news release, before the price began to move. Now we see the price moving generally even before the news release. Simply because the market is evolving. And there was another reason for some news, not all the news, but for some news, the banks have a better forecast than the forecast we can have in any economical calendar. And so this helped them to better or to fine-tune their position in the market. So, and knowing that, they use a lot of techniques to get good price entries or good price for their exits. And so, and this leads, of course, to a set of manipulation technique in the price action itself. So it's really a fascinating subject to study. So how the banks are able to put the market in the opposite, temporarily in the opposite direction of the movement they want to exploit in order to get better entry levels. So, and there are some techniques helping to have a better understanding of what is happening with concepts like order flow, like footprint, like using the market profile, which is a tool, or the volume profile. But again, these tools are useful if you really understand the context. Any tool you may use will never give you the secret to be successful in a trade. You need to understand why the price is moving in one direction and then how to handle that direction. Now, one question which can be asked is how much time do we need to stay in such a trade? In fact, when you observe statistically the news release over many years, I like to observe statistics about minimum 4 to 5 years, sometimes even more. 7 to 10 years for me is a good time period because we have in such a time period all the possible situations which may happen in a market. So when we have a big surprise in a news release, like today in the pound CAD, for the CAD, non-farm payroll, the impact of this news in the market lasts up to 6 hours, 5 to 6 hours. During the day after the news release. And so we have plenty of time, in fact, to handle the movement. So, but in the presence of a big surprise, and sometimes the impact may last even longer, several days, sometimes several weeks, when it is a big surprise on the interest rates, because the interest rate is the most important driving factor in the currency market. So when we have a big surprise in the interest rate, then the impact may be on several days, sometimes on several weeks. So this is why following the interest rate policy of the central banks is very important. So it's even fundamental. When I use the term global context, I mean all the factors which may impact the currencies, possibly other markets, of course, because there are relationships between the markets. But for the Forex, I mean the news release, I mean the central bank's decision day after day after day, not only the interest rate, but also their daily operations, the geopoliticals, of course, and when we trade intraday, like I'm illustrating today, also some timing consideration. For example, we are approaching progressively the Wall Street Open here in a few minutes, in 10 minutes approximately. You will see very often that with the Wall Street Open as well as the US Open, in the absence of news, the price may reverse somewhat. For example, here we had the US Open, the price was going downward, and so the price has made a small pullback. This is what I call a price reversal. It is not a trend reversal, it is a price reversal before, in this case, the trend to resume. And so we observe such a behavior also around the Wall Street Open. We also often observe such a behavior around the London Open and the Frankfurt Open. And there are other time reversal along the day when you see such pullbacks. So the pullbacks are not made randomly. So they are made on specific moments on the day, for many of them at least. Not all of them, but for many of them. Okay, Edward, thanks for having come today. Have a good day also, and happy end of the year and New Year, because the next open house session will be in January, I think. So happy Christmas, happy New Year. Thanks a lot. I appreciate. See you next year too, Winston. That's interesting. Now we are seeing in the currency meter that the CAD is gaining strength and the pound is losing strength. So will we see the down movement resuming? So should I close my trade earlier? As I have said, we had an exit setup in this area, so I could have closed my trade. This would be this candle now presently here, this one is an entry setup to open a new short trade. But because I'm still in this short trade, so I have to handle that. But this would be another entry setup. And so whenever we have an entry setup as well as an exit setup, we define a level to execute the action. So here to open a new trade or to close partially the trade. So here we would have to open a new trade, in this case below this green line. So thanks, Randy. So OPEC and Russia agreed to cut output, so lifting oil price. And this is interesting because this may have some impact also in the forex. So the price of oil has an influence on some currencies, like the CAD, for example, like the US dollar, for example. And so we may see some influence. I still cannot adjust my stop loss. I can remove that level because my red line here stays flat, and I need to keep my stop loss above that red line. So will this red candle, when it will closes, be enough to push the red line downward? So we'll see. Yeah, Dan, indeed, because the CAD as well as the OZ are called commodity currencies, and so the CAD is influenced by the oil price, or there is some influence of oil price on the CAD, as, for example, there is some influence on the OZ with the price of gold. Gold has also an influence on the price of CAD. So this is why, by the way, they are called commodities currencies. And I still cannot adjust my stop loss, and the price is nicely going down. So you see, this would have been a nice, other entry setup, and with another trade nicely going downward. So several bars have been printed, and now the red line begin to drop. I can begin, no, this magenta line now is above, so I still cannot adjust my stop loss. Oh yes, perhaps 2 or 3 pips. So let's adjust it to this level here. Just looking a tiny additional profit. You see, if I close the trade now, I lock 1% profit. Okay, Sam, no problem. Have a great weekend. So, and yes, it will be the session number 5 of the Max Standard course, and it will be an amazing session. So, I think you will enjoy it. So see you tonight. And so these magenta and red line, when we are in a short trade, or blue and orange line, so are simply lines which are based on momentum and volatility, and so I use them to adjust my stop loss. Because for me, the one way to explain the price movement behavior, not the reason, but the behavior, is to take into account the momentum and the volatility. We can always decompose the price movement in momentum and volatility, and I like to take into account both of them to adjust my stop loss, just to leave place enough for the price to move and not tighten too much my stop loss. This is an error made by many traders, I consider, tightening the stop loss too much and to be stopped out too early. Eva. It's not a secret sauce, but it's a nice tool. Indeed, Craig. If we are trading with the ETF standard level, so this candle here, which can be an entry setup for a new trade, would have been also an entry candle for a scaling of any of the open trade. So this candle here, and I'm going to mark it. So this candle would have been the exits, the scaling entry setup, and my entry would have been here for scaling, and I would have noted it. Where is my notation tool? It's here. So I would have noted it scaling number 1. So adding 2 units to my trade position, okay? But when we don't have time enough for an open hour session, I don't make scaling, because making scaling add the risk to the trade. For example, here, you remember my initial stop loss was around 40 pips. This scaling would add here a risk of 2 times 23 pips, so approximately 0.5% risk to my trade. So potentially, this scaling would have made my trade now simply break even, should the price reverse quickly and hit my stop loss. So this scaling, if it is not made properly and the price hit the stop loss, would cancel my profit. This is why the scaling must be made extremely carefully. And in a 2-hour period, we don't have time to handle scaling. So, but this is the idea. And we have strict rules, in fact, to make scaling. It is not enough to have an entry setup to make a scaling. There are other conditions to make a scaling precisely in order to control the risk we add to the position. And this is why making scaling, so because of that risk aspect, it's better, in fact, to make scaling when we catch a trend starting around the London Open. Because we catch larger movement, and when we have larger movement, we have way more flexibility to handle these risks associated with the scaling, because we can make several scalings, of course. Just as an anecdote, my record in number of scalings in the same trade, in the same trend, so it's 27 scalings. 27 scalings. That's really amazing. So, and of course, when we make scalings, so the first scalings are always dangerous because, as I explained, they add risk to the position. But at some point, if the movement is ample enough, and we are able to make some MX, so an MX is closing at each time 1 unit. We call that a momentum exit or minor exit. So we make some MX, we make some scaling, we adjust the stop loss. At some point, we are in a sure profitable trade that whenever or whatever the number of scaling we make, we are no longer at risk. And so the only thing which happens is an improvement of the profit through the scalings. So, yeah, only 27, only 27. Yeah, Abraham, on this chart here, this candle is a potential Remo setup, but we have just one problem you can imagine. So this is a potential Remo, but unfortunately, and this happens when we have big surprise with a news release, it's a long bar. Okay? It's a long bar. So you cannot use that candle as a valid Remo setup. If you compare the length of this bar with the previous bars, and you know which bar you have to use to compare its length, it's a long bar. Okay? This is why trading the news, especially the non-farm payroll, is always a difficult context, in fact. And we don't have the problems of the long bars when we use the sum charts, because in the sum chart, we don't have long bars. We may have a succession of several candles, of course, but we no longer have the problem of the long bars. Ralph, in that trade, so I don't remember, it was several years ago, because such kind of trades, of course, does not happen every day. So I'm trading the max since 2008, and I have been lucky enough to catch ample movement, so 3 times. And so that one was an important, I think it was the second one, and with 27 scalings, I have made a total rework to risk ratio of around, if I remember correctly, 120 hours. 120 hours. And so with, at that moment, my risk was 1%, and so I have made, so 120% profit on my account on that trade alone. And the last big movement I have caught was for the Brexit vote, when we began to have, during the night, the result of the Brexit vote. I remember I was giving a trading course on the Max Advanced course, and I explained to the students that the session would have been a shorter session, or I was in a hurry to close the training session because I wanted to trade the Brexit, and indeed I have traded the down movement on the pound that night, and the trade has lasted a little more than 3 hours. And I have made way less scaling, and I can explain why, because there were strict conditions, so way less scalings, around 10 approximately, but I have made a better reward to risk ratio due to the nature of the movement, so 337, I remember exactly the number, 337 reward to risk ratio. But my trade risk was only 0.5% that day. So I was expecting a high volatility, so I have not forced on the scalings. I have used more flexible rules for the scaling technique. You know that we have a special rules for the scalings. We have a special criteria for successive scaling, so I have widen one of the criteria on the scalings, and I have used a larger stop loss than usual because of the volatility. And the volatility was one reason, but there was a second reason. the brokers, as they are used to do nowadays, have increased the minimum margin on the trade. And so I had no choice. So to be able to continue to make my scalings, I was forced to use smaller trade size. And so this is how I have handled that trade. And from time to time, I show the chart of that trade during our scrolling parties. So how frequently can trader expect to see a trend that allows room for scaling? Oh, that's a good question. So indeed, so as long as the price is moving, so I can explain. Let me take my pen here, and I hope it will work. So on around 25 to 30% of the movement we trade with the max, we have no scalings, okay? So this is the first statistics. In around 50% of all the movement we catch, we have at least one scaling. So this means one scaling or more. In 75% of all the movement we catch, we have two scalings or more. And then the probability of scalings decreases. We have approximately 10% of the movement we catch when we have three scalings or more, and around 5% of the movement we catch when we have 4 or 5 scalings or more. These are approximately the statistics we have. And so most of the time we have between 1 and 3 scalings, so most of the time. And so we have enough opportunities so to make scalings. It is not necessary to make 10 scalings. 1 scaling, 2 scalings are often enough to greatly increase the profits we can make on the trade. You see here the price is moving in our favor, and with that scaling entry, the price is already moving approximately half of the size of my initial stop loss size. And so half of the size, if I close the 2 units of that scaling now, I will increase the profit by 0.5%. So 0.5%, only by that scaling. So instead of banking let's say 1.2%, I would bank 1.7%. So. And I see that now I can tighten my stop loss. This line is dropping, so I can tighten my stop loss around this level, and I will lock a little more profit, so around 0.71%. This means that this scaling now, should I have taken it, would no longer represent a risk for the global trade. The risk was approximately 0.5%, so now the potential profit on the first entry is completely covering the risk of the scaling number 1. This means, so if we were not solid during the day because we are progressively approaching the Frankfurt close, this means that if there is another scaling opportunity, there would be no problem to take that scaling. And the scaling would be, this candle here, this one precisely, is another entry setup for a scaling. But this time the entry would be in this area. The risk on this scaling would be identical to my initial risk. And so this means that with a 1.2% profit on this, with this scaling, so I would still be profitable with that new scaling. Okay? So I would have had a second scaling here in this area. We would call it SC number 2. SC number 2. and the profit made on the scaling number 1 and the locked profit on the other unit, so cover exactly or even more than the risk on the second scaling. And I can tighten a little more my stop loss, so around this level here. Now we can see that the scaling number 1 is break even. So now with additional adjustment of the stop loss, this scaling would lock additional profits, and so the risk on the scaling number 2 progressively decrease. So, and adding 1 to scaling will increase importantly the profit. You can simply double the profit of a trade with no scaling. This candle here would have been an exit setup. So I could have made an MX here with the scaling. And this blue candle, if it closes as a blue candle, it will be also an exit setup. So, an exit setup, but we have to wait for the candle to close, and once the bar is closed, we have then, if it is a setup, we have to define the exit level. So yeah, it's not a surprise to see other pairs moving the same way, of course. So the Aussie CAD, the Aussie, where the CAD so is here. The Aussie is here, the green line here, this one. It's not the best pair to move, but okay, it's a good pair. The CAD yen, the CAD and the yen, which is this blue line, the yen is losing strength, so the CAD yen is a good pair to trade in this, and the USD CAD, of course, with the USD being that orange line here, this one, losing strength against the CAD. So good trades, good pairs to trade indeed. So this blue candle would have been an exit setup bar, but the price does not hit here this would have been an exit level. Closing, for example, 1 unit of the scaling number 1. But here I have not taken these scalings, okay? Just to illustrate the mechanism, how these scalings can be made. And I can tighten a little bit my stop loss, locking a little more profit. Now I'm locking almost 1% profit. And you can see that the scaling number 1 would begin to contribute to increase this sure minimum profits. But if you remember, I have decided to close that trade at the trend reversal. Now, in this situation, even if the price continues to move downward, I would stop making any scaling. I would make no additional scaling for one simple reason. This movement now begins to achieve an extreme level. An extreme level which is given by this indicator. So this indicator now prevents me to make additional scalings. I cannot adjust further my stop loss, so where is our next max price level? Or it is here at 16866. So we are far away by 65. So we have place enough for the next max price level. But now this trend can exhaust at any moment. But we are under a big surprise, good surprise in the Canadian non-farm payroll. So in the absence of this news release, on the next exit technique occurring not on my sum chart but on my time bar chart, I would make an exit. I would close my trade. Why? There is a reason for that. We are in a context we call a true trend. And when we are in a context we call a true trend, we have a 75% probability for the trend to exhaust in a special area. And this special area is approximately, where is my drawing tools? I have to adjust here my tools, customize. I don't have the rectangle. Insert, close. And so in this area, in terms of time, we would have the moment when the trend will exhaust. However, let me draw the rectangle as I'm used to do. However, we are seeing also circumstances when the movement will exhaust earlier than in that time period. And furthermore, we are in the context of the non-farm payroll with a big surprise. So we have two opposite situations. So, and consequently, I'm not certain the trend will exhaust either in that time period or in this down movement. It may continue to go downward after this time period. And so now the price is accelerating again. I still cannot adjust my stop loss. We need to wait for now this magenta line to drop. But you can see the profit is a nice profit on the trade. And with the scaling, this would have increased the profitability of the trade. Yeah, all the card pair done would have been a good pairs to consider trading. So the pound card, the euro card, the USD card. So nice pair. And the pound card, if we consider the pound card for the entire day, so it has a high to the low of a distance of 200 pips, 212 pips approximately, way better than the usual nice moving pair like the pound Aussie or the pound Kiwi. Their movements are from the high to the low are less than 100 pips. So the pound card has made twice the movement of the pound Aussie and the pound Kiwi. This does not mean, of course, profit which would have been the double because of the pip value of the pip value depends on each pair, of course. On the next candle, I will be able to adjust. So at the close of this blue candle, I will be able to adjust my stop loss. Let me draw carefully this rectangle, at least correctly. Okay, now on this next candle, I can tighten further my stop loss. Yeah, above this green line. Looking now exactly 1%. And you can see that with the scaling number 2, the risk would be very small now on that scaling number 2. If I have the opportunity to close the trade before the end of the session now in 25 minutes approximately, I will give you the result of the trade with these two scalings because it's easy to calculate the result. So manually. But here you have the result of the trade. So this trade does not take into account the scalings. Or the spread on this platform, the spread on the pound CAD is less than 2 pips. Less than 2 pips. I can tighten further my stop loss around this level, looking a little more profits. Yeah, this broker has nice spread, very small spread, but I don't know the quality of this broker. This is a demo platform, of course. It is not a live, but the data feed is exactly identical to the live data feed, and the spreads are real spreads. So. And because we are not scalping, this is not scalping, we are not scalping the market, so personally I don't care about the spread. I have an account, a live account with another broker where the spread, for example, on the pound CAD is between 3 and 4 pips. 3 and 4 pips. I don't care for that. It's the price to pay to make the trade. When you scalp, on the other side, when you scalp, the spread is important. Of course, because the spread represents an important portion of the profit you leave to the broker. You leave to the broker. Now, the number of decisions we can take on a sum chart depends on the details we have on the chart. And the details we have on the chart depends on the size we choose for the size of the bar. And so we have rules to choose the size of the bars. We have the optimal size, and then we have an alternate size if we want to have more details in the price movement. So, because more detail we have in the price movement, more potential decision in terms of entries and exit we can take. And by the way, I'm going to name the entry setup, my initial entry setup, which was a short ETF Remo. Number 1, because I like usually to number my trades on my charts. But we have an option with the max trade monitor. The max trade monitor can annotate the chart automatically. I don't choose that option because the notations are fixed on the chart, and so I prefer to note the chart manually. Okay, I think I can tighten a little bit my stop loss. Yes, here, this area. So, looking a little more profits. Usually I have plenty of flexibility between the minimum locked profit and the potential actual profit. So, and this is why I can stay in the trade. The risk on the scaling number 2 is really a tiny risk. So this scaling, should I have taken it, would not be a problem. And so longer I stay in the trade, longer all these scaling would contribute to the total profitability of the trade. This is why trading trends is so profitable, or maybe profitable. Now you see here a white arrow appearing, sometimes disappearing. So at the close of the bar, if a white up arrow is present, this simply, like for example here, this simply indicates that the 2 ETF lines are crossing upward. This is not the end of the trend. The end of the trend will be given by this red-green line. For the moment it is red, so we are in a downtrend. When it will turn to green, or if another condition is fulfilled, we will have a trend reversal. I can see here for the moment that we have the possibility for a trend reversal in the sum chart, but not in the time bar chart. In the time bar chart, we are still nicely in the downtrend. So we have plenty of time to stay further in this downtrend. Now, there is something, in order to better choose the days you want to trade more aggressively, for example, or less aggressively, there are typical behavior in the market, which are induced by, essentially by the news release, in fact. If you observe carefully the calendar, months after months after months, you will see that most of the time, the important news release of 1 month happens during the week number 1 and the week number 2. Most of them. And so this is the reason why, in fact, the movement during the 2 first weeks of the month are the best movement to trade. During the week number 3, generally we see a quiet market because we have way less news. And during the week number 4, we have more choppy movements. Because in fact, the banks are repositioning or recalibrating their positions for the next months. And so you can trade more aggressively the 2 first weeks, be extremely prudent, not aggressive trading during the week number 3, and during the week number 4, don't be surprised to see more choppy movement. A choppy movement is not necessarily a bad situation. This is because simply the bank prepare for the next trade campaign. And so this is a typical behavior you can take into account. So the best movement during the week number 1, number 2, quiet market during the week number 3, and choppy market during the week number 4. This may help very often to adjust your trade style. This happens often, not always, because as I have said earlier, the 100% behavior or feature never exists in trading, but this happens very frequently. We are in the period of the 2 first week of this month. With an exception, the 2 last week of December, especially starting on the Monday before Christmas up to the Friday after New Year, will be for me a very, very quiet period. The big boys are absent from the market. So it's a good time to have some fun, not trading. So we are approaching progressively the end of this session. Any questions about everything I have explained today? Or any questions about the max? So you can post your question in the question area of the GoToWebinar, of course. For our max trader, you can post your question in the chat, in the private chat room of the max. So any questions? And of course, if you have questions later, feel free to send us an email. So I think Craig has posted his email somewhere, or perhaps he will do that. So oh, it's not a magic. It's not magic done. It's simply, you know, if you do that for any news release, this is the trading plan for the news release. And so when I'm not in a tradable situation, especially for the non-farm payroll, I don't trade the non-farm payroll. But when the conditions are appropriate, as it was today, I trade the non-farm payroll. Exactly as I have illustrated here. Then I apply the rules. And so I don't try to predict what the market will do, except with the context. Here, so I trade in agreement with the context of the non-farm payroll. I apply the rules. Okay, now we are seeing here at this red candle, so the possibility for the trend to reverse. Now I need to wait for this candle to close, to have or it has already closed on this candle. This candle is an entry setup for a potential long trade, but the long trade is not in agreement with the context, so I will not take the long trade. However, I will close my trade if the price comes to this level here. So it happened, but it is a coincidence that the level is right on the red line. So if the price touches that red line, I will close the trade. It's just a coincidence. It is my exit level with that entry setup to go long, because the trend is reversed. But with the price coming back downside, the trend reversal seems to disappear. So we have to wait for the price to reach really the level. So. And when I see that, what I do very often is I tighten further my stop, but the stop loss is already very close to the price, so there is no need here to tighten further the stop loss. So I am late to log in. Can you please explain the trade you took? Thanks. Yes, VB, I will explain just in a moment. Let me wait for the close of this candle first, okay? But I will explain, indeed. Just to see if I have to close the trade, this trade. Okay, so the setup has disappeared, so we are not in the context of the exit for the moment. On the contrary, the price seems to resume the down movement. So what was the trade? So we had today, half an hour after the US Open, the non-farm payroll. Okay, and so my scenario were the following on the US dollar and on the CAD. I have taken a trade on the pound CAD, so let me explain on the pound CAD. The employment change had a forecast of 10.5K, and the unemployment rate a forecast of 5.8%. And my three scenarios were the following. If the employment change would be released with a number larger than 13K and the unemployment rate smaller than 5.6%, then I would take the CAD long. With smaller number, worse number, I would taken the CAD short, and in all the other situations, no tradable situation. And it happens that the employment change has been extremely large, around 90K, and the unemployment rate was, if I remember correctly, 5.6%, so better than, or 5.7%, so better than the forecast. And so we were in the context of going long the CAD, and so shorting the pound CAD. The pound CAD was one of the pair I was following. And so at this point, a few minutes after the non-farm payroll on the CAD, I have opened a short trade, which is named a short ETF remodel. This is the name of my entry setup. My stop loss was around this level at 40 pips, just above this max price levels. And then I have made an MX, so an MX consists in closing half of the trade size at this point, and then I'm still in the trade with my second trade, half of my trade. When we do an open house session with the non-farm payroll, the session lasts 2 hours. I have no time to make correctly scalings, but I have shown also where I would have made scalings, 2 scalings in this case in normal conditions, when I have plenty of time, when I can concentrate seriously on my trade. So this would have been the 2 scalings in that downward, and no further scalings so in this trade due to specific conditions of the type of movement we are seeing. And along the trade, using these 2 magenta and red line, I progressively adjust my stop loss to tighten the risk on the trade. And so this panel here, which is my control panel, I have 2 main numbers, the ESL result, the x66 profit. The ESL result represents the result of the trade should the price hits that stop loss. For example, if the price retraces fast and hit my stop loss, I would still lock 1.12%. And the x66 result or profit represent the profit I would make now if I close the trade now on the present price. Okay? And so the difference between the two numbers gives my flexibility to handle that trade. So this is the recap of this trade. And so I could have closed my first trade in this area because, in this in this area because I had an exit setup. But I have decided to stay in the trade until the trend reversal. We may still have another trend reversal here. And so we have several ways to handle the close of the trade. Let me draw an horizontal line where I will have my exit level. Or we can stay in the trade, or we can close the trade and open another one, possibly. So my exit level will be at this level, approximately this level. And in the meantime, I can perhaps tighten a little more my stop loss, yes, around this level here, locking a little more profits. So the trend reversal here is very sensitive to the candle, so sometimes it appears, sometimes it disappears. It depends the direction the price wants to take. So, but as long as it stays red, I will stay in the trade, unless the price hits my stop loss. So just to recap, I have taken a trade on the pound CAD in agreement with the Canadian non-farm payroll. We had two non-farm, one on the CAD, one on the US dollar. On the US dollar, the non-farm payroll has not produced for me enough conditions to take a trade. On the CAD, yes, and so this is why I'm illustrating the max process with the pound CAD. Is it okay? Okay, fine. No problem, you're welcome. You can see by the adjustment of this last stop loss adjustment, so the scaling number one would have locked more profit, and the risk on the last scaling is really tiny now, probably the size of the spread. Yeah, 5 pips, so 5 pips. But with a good probability for this scaling to become itself risk-free if we are still in the trade, because the trend reversal does not confirm. And so if we have an opportunity to tighten further the stop loss, most probably this scaling will become also risk-free, contributing to increase the profit of this trade. Should have I taken this scaling, of course. Yeah, Craig has mentioned the email. You can send any questions after the session if you want. So max trades for number 4. So max trades for you at gmail.com. You can see if I close the trade now here in this level, in this area, so I would make, as you can see here, around 1.5% profit. Let's write it on the chart just to show you the difference with the two scalings. So let's suppose I have closed my trade where I have drawn my blue line. I would bank 1.5% profit, okay? Just to show the contribution of the other two scalings. This scaling, number 1, would add at this level, so 50 pips, with a stop loss of 40 pips, an initial stop loss of 40 pips. This represents, so 50 divided by 40, it's 1.25 reward to risk ratio. This scaling would have added 1.25 So let's add 1.2% plus 1.25% in fact. And the scaling number 2, should have I closed the scaling number 2 also at this level, would have added 22 pips, so 0.5%, so 0.5% plus 0.5, not 10 of course, this is a typo, 0.5%. This means a total, when we add all these percentages, 1.5, 1.25 and 0.5, this means 3.25%, so a total of 3.25% instead of 1.5%. See, so just 2 scalings are enough to more than double the profit of a trade with no scalings. This is the virtue of making scalings under appropriate conditions and under appropriate trade risk management. Okay? Oh, thanks, Ralph. Oh, yes, I'm getting better week after week after week. And of course, this total profit would be a little smaller should I close my trade at any level between this level and so my stop loss, of course. But still a decent profit because the scaling number 1 would produce, even on the stop loss, a decent profit of approximately here. We have 25, so approximately a little more than 0.6% approximately. Now we have, with this candle here, we have an entry setup to go long. So long trade I would not use, but I will use that entry level to close my trade exactly at this level. So we are exactly now at the level where I should make an entry to go long. So here I close my trade by pushing on the button XXX here. I'm going to wait a few seconds because the price is just below my blue line. And so whatever the number of open units, the XXX button closes all the open units. Not yet. Okay, now, yeah, the price is right on the level here, so I am in a condition to make my XX. So here I push on the XXX button, the trade is closed, okay? And so I would not have made this profit on the scaling number 1 and number 2 because I have made the assumption where my blue line was previously, but we can still see the scaling number 1 would have produced a profit of 0.75% approximately, and the scaling number 2 around or neglectable, so almost nothing. So a nice profit with the scalings. Okay, and so I have closed this trade because now I'm seeing here a trend reversal, but the context is not favorable to take a long trade, but it's enough to close this trade. And so you can see that this trade, without the scaling, has closed a total profit of 1.29%. The risk, the initial risk was 1%, so a 1.29 R for the reward to risk ratio. Okay? And without any risk. At any moment we have been at risk because we were trading in agreement with the context. So what is the fundamental requirement to start trading this pair? The fundamental I have considered here was the non-farm payroll, which was the big news of today, VB. And we had 2 non-farm payrolls, one on the CAD, one on the US dollar. And so I have explained so my scenario for the CAD. So the context was in agreement the bullish card was the scenario the market was unfolding, and so this is why I have played the pound card. Now, why the pound card? I could have taken the USD card. On our website, the maxtradingsystem.com, with the news watch list page, we always indicate every week not only what are the news which are really important, not all the news are represented, but we also propose a list of pairs to trade every day, and we do that every weekend, every Saturday. So tomorrow we will update this list of pairs to trade, and these pairs are to be considered based on the news release here. And if we have on these news release some big surprise, the related pairs will move nicely. Okay?
Eusebio?
Yes, Craig, please.
Excuse me. I think he is asking what amount of funds is required.
Okay. You can begin to trade this way with a small account, $10,000, $2,000, for example. For me, $2,000 is really the minimum trading account requirement to trade with the max, or larger, of course. Okay. Now it depends what is the minimum size the brokers allows you to trade. If it allows you to trade micro lots, then $2,000 is the minimum to start. If it allows you to trade mini lots, then it's better starting trading with $5,000 or better $10,000. But $5,000 is enough. Okay. And now, if you look in the terminal panel, so the trade indeed is closed. Okay, and if you go into the account history, you will see how the two units have been closed here. Okay, so the total trade was a trade of 38 mini lots. I have shown that at the beginning of the trade. The first close has closed half of the size, and the second close now has closed the remaining half of the size. And so you see the result. So I have said 1.29%. In fact, it will be exactly 1.27%. Okay? So that's it. Any question before we wrap up this session? And I hope you have enjoyed the session. And so the trend result has come right at the end of this session. It's really another coincidence. So any final questions before we wrap up? Oh, thanks, Peter. Have also a happy Christmas, happy New Year, a Merry Christmas and a happy New Year. Thanks, Frederick. So you are all welcome, and so you will be, of course, invited for our next open house session. We usually make an open house session for every non-farm payroll and some other events during the year. And when the circumstances are appropriate, I illustrate how we apply the max. I hope you have enjoyed. And so let's see in one of our future courses. You will be informed, of course, of our future sessions, training sessions. And so let's see on the other side of the fence. In the meantime, if I don't see you until the end of the year, I wish you a Merry Christmas, a Happy New Year, and see you next year. Bye, everyone. Oh, thanks, Adrian. Oh, nice to see you here. No problem, Adrian. See you later. Bye, everyone.